Okay, so here's the challenge. It's a bear market. We're getting into a recession, and you have to find 3 places that will make money in a bear market. What do you do? Where do you put your money to work? I'm going to answer that question in this video. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic and got some exciting stuff to share with you in this video. We're going to talk about 3 places that you can put money to work in a bear market. Now, unless you've been living under a rock, you realize that the last 9 months, the stock market looks like this. So we've got a big old top, and we're kicking into full gear with our bear market here. Now, Dow Jones down a little over 20%. The S&P down a little more, like 25, 26%. And the NASDAQ is down over 30% already. And there's a lot more to come. So the question is, where do you put money? Traditional wisdom says maybe put it in gold or silver. Gold and silver are a hedge in a bear market, right? That's what they say. Well, let's come over here and take a look at the chart and see. Here's spot gold prices, and it has been going down for a while. That's a problem. Now, I want to say something to this point. A lot of people are out there saying, oh, they're suppressing the price of gold. You should buy gold because it's going to go up. Look, it really doesn't matter what you think is happening. It really doesn't matter what, from a kind of fundamental theoretical standpoint, the price of gold should be. What matters is what's happening right now. And what really matters is if you bought gold in May, then you're down like 20, 25%. That's the facts. So forget what your personal opinion is on gold. I like gold. I like silver. It's just not where you should be investing in the stock market right now in terms of gold and silver. Okay. So, let's go somewhere else. How about, let's do silver. Should we be buying silver? Well, here's spot silver, and Okay, since the beginning of the year, we peaked out in May, a little over $26 an ounce, and we're currently around $20 an ounce. So, boom, that one's off. That one's not doing good. How about treasuries? Here's TLT. This is a treasury fund. This is a treasury fund that we use when we get into a bear market, usually. Treasuries, folks. What in the world? Let's see, where else? Where else can you put money? That's the problem. In a bear market, everything's going down, especially in this bear market. Treasuries are tanking. Gold and silver are going down. Stock market equities are obviously going down. Even real estate's going down. And as interest rates are going up, what's happening? Real estate going to start coming down substantially. I've talked to some realtors. They're like, oh, it's going to stay really strong for a long time. Yeah. Sorry. I like you if you're a realtor, but look, real estate's going to come down. Everything's coming down. Okay, so I don't know that we're getting into deflation necessarily, but they're raising interest rates so much that you're seeing a lot of impact. So the question is, where can we put money? I keep raising my hand, 3. I wanted to come up with 3 places that you can put money. And here's kind of my philosophy on this. I'm trying to keep it simple for you. There's a few rules that I'm putting in here. Number 1, these are buy-only trades, okay? So I'm not telling you to go short the market. I'm not telling you to go trade options. I'm not telling you to go do anything crazy. These are going to be buy trades. You buy the stock long, okay? Second thing is it needs to be something that if it's in your self-directed account that you can do it. Now, if you're, depending on how your retirement accounts are set up, you may or may not be able to execute some of these. But if you're in a regular self-directed trading account, if you're in a regular self-directed IRA or whatever, you should be able to do all these, okay? And then, of course, big criteria is it needs to go up in a bear market. So we've already kind of hit the big story here, which is everything's going down. When everything goes down, what goes up? And the answer is inverse ETFs, exchange-traded funds. I'm a big fan of inverse ETFs. I've talked about them in other videos. I'm going to share a couple with you right now. This picture is the Dow Jones Industrial Average. If you look at this from from January to today, in January, it was over 36,000. Today, it's just below 30,000, below 29,000. All right. Way to go, Dow. So obviously you don't want to buy the Dow. What if you did? What if you did want to buy the Dow? How would you do it? Well, we would use an exchange traded fund, an ETF with ticker symbol DIA, Dow Jones Industrial Average, DIA. We would buy that, and when the Dow goes up, that ETF goes up. When the Dow goes down, that ETF goes down. That's the way an exchange traded fund works. Now, I said stocks because these are technically stocks. An ETF, an exchange traded fund, is going to trade like a stock on the stock exchange. You're literally buying shares in this fund, okay? It's just that instead of the shares of the company being a corporation, corporate structure, it's a fund structure where they invest in other assets. In this case, they're going to mimic the Dow Jones, okay? So DIA is the tool that we would use if we wanted to trade the Dow Jones Industrial. SPY is the exchange traded fund that we would use if we wanted to trade the S&P 500. And then QQQ is the one we would use if we wanted to trade the NASDAQ. Well, what if they're going down? What if the Dow's going down? What if the S&P is going down? What if the QQQs are going down or the NASDAQ's going down? Well, in that case, all those ETFs are going to go down. So what would go up? The answer is an ETF that does the opposite. An ETF that's what we call an inverse. It actually shorts the market for you so that you can participate in the upside of the downside. Does that make any sense? It's an inverse ETF. It goes up when the market goes down. So I'm going to share 3 of them with you for the ETF, for the indexes. Then I got 3 extras I'm going to share with you that you may not have heard of. Some of you have. The first one is DXD. This is what you're going to use for the Dow Jones. And you can see here, it's already started to make its big turn here. Got a phenomenal buy signal on Friday. I'm not telling you you should buy this. I'm just telling you that we got a great buy signal. You can see the bottom is in here. If you're into technical analysis, we got inverse head and shoulders. We got higher highs and higher lows. We got all sorts of things that confirm this trade. The biggest thing you need to know is it was just a month ago that it was 42, and today it's over 56 on the scale. And we've got some much higher highs we can go to. I'm going to give you a sneak peek here and just open up some of my chart lines. And there you go. That's how high I think it's going to go in the relatively near future into the 70s. It's got some really good upside potential. This is ticker symbol DXD. That is going to trade the short side or the inverse side of the Dow Jones Industrial Average. So DXD is the first ticker, okay? Now, I want to be really clear as I'm giving tickers. I don't usually try to give specific tickers in these videos because I'm assuming that you're using this for educational purposes, which is what it's intended for, okay? So I am not saying that you need to go buy these funds. If you choose to do that, that's up to you. All I'm doing is giving you some ideas that you can go look at, and if you choose to take action on them, then you can do that, okay? So I just want to be clear about that. And also just be aware before I go any further here, also be aware there's a lot that goes into trading. Of course, I teach all of this in my courses, but it's not just as simple as going and buying, because the truth is while you can make a lot of money with these, if you don't know when to get out, which most people don't, if you don't know when to get out, then you can lose a lot of money too. So you buy these funds when they're going up, and then when it's time to get out, you take your profit. It's kind of the idea. Take your money. Yep, you want some money, right? Only if you want to have a happy honey. Oh, that was horrible. All right, let's take a look at the S&P 500. This is what the S&P has been doing, down over 25%. The tool we are going to use for this is SDS. This is an inverse fund for the S&P 500. SDS is the S&P 500. Inverse fund, and you're going to buy this just like you would a stock. It was only the beginning of September. It was $38 a share, and here we are. It's over $52 a share. Do the math on that. I will do the math for you. If you are holding traditional mutual funds and your fund managers did not get you out of the market, you're down right now 30 to 40%. If you did this trade, you would be up 30 to 40%. There, I did the math for you. Now, again, I want to be clear. I'm not telling you need to do SDS. I'm not telling you that you need to do DXD. I am saying that these trades are going higher in a bear market. That's all I'm saying. And if you did decide to do them, you need to make sure you use some good diversification. You need to make sure you use some good wisdom. But, if I had to find at least 3 or 4 tickers that are going up in a bear market, this is a good place to start. This here is the NASDAQ. Woo! It's a doozy. That's going down bigly. So which one do we do for this one? And the answer is QID. QID. Look at that. Since September, we went from 18 to 27, almost 100% gain. Now, how did QID, how did QID get 100% gain almost, not quite there, but almost 100% gain in just a month. Let that sink in. Hold on. Let that sink in, folks. Your mutual fund managers, your fund managers in general, your retirement fund managers, they tell you to expect 10 or 15% a year, right? And here's a fund that you can go do on your own, and I'm showing you that it has gained almost 100% in the last month. Why are your professional fund managers not moving your money into these funds? I don't have the answer. You don't have the answer. It makes no sense because that's what I would do. And that's probably what you would do if you knew how to do it as well, which I'm teaching you. So I don't know why these so-called professionals don't do smart things with your money. I really don't get it. It blows my mind. Been doing this for 14 years, never figured it out. QID is the ticker if you're wanting an inverse fund for the QQQ. There you go, folks. That's a good one. I like it. Full disclosure, I have all three of these. I have a position in all three of these inverse funds. Full disclosure, I have since last November. I've had several positions along the way. We have sold options against them. We've done other things with them. I'm just giving you full disclosure so that nobody could ever come back and say I didn't disclose it. All right, well, those are the three index funds that I wanted to share with you, and those are cool. But, I got to thinking, everybody knows those. I've already shared those in videos. What is something unique? And I found three funds that I'm pretty excited about that I want to share with you, so I'm going to share those with you right now. Treasuries is an asset class that a lot of people are really excited about in a bear market because treasuries oftentimes will go up whenever the risk of the S&P and the regular index kind of balances out or goes down a little bit. So what we do oftentimes is move into treasuries. Of course, as I've already shown you, here's the ETF we usually use. It's called TLT. Well, that didn't pull up. Let's try that again. TLT. There you go. This is what TLT has been doing. I just laugh. Since 2020, this is what's happened with TLT. Goodbye, TLT. Man. So what would you do on the other side of this? And the answer is TTT. Oh. What? Yep, folks, if you've been looking for a trade that is going up, TTT. Since the beginning of 2022, TTT was $28, and today it is $80 almost. Actually, it's $79, but 80 is close enough. So this is a trade that has close to tripled in 1 year, actually in 9 months, and there's still more room to go. How do I know there's more room to go? Because what are we hearing them talk about with Fed? Raising interest rates. When they raise interest rates, what happens to these treasuries? Treasuries go down, these go up. Okay, TTT goes up. So there you go. That is a ticker that honestly I hadn't paid much attention to, and that is now fully on my radar. I will be talking about that one a lot more. TTT, okay? Again, I'm not telling you to buy these. I'm just telling you these go up in a bear market. All right, the next one to show you is real estate. DRV is the inverse for real estate. DRV. And this is a fund. Well, I'm writing on the screen. How about I change the ticker to go with this? DRV. There you go. This is the chart. Oh, this is a good one. Oh, I love it. I love it. Now, when you look at this, you're sitting here saying, well, Jeremy, that one's already moved big. It went from 34 in August, and it's already at 76. What, did you hear that? 34 in August to 76? Blowing my mind. Almost 3x in a month. Folks, this is crypto trading kind of profits in the stock market. Some of you guys looking forward to trading Bitcoin again? That'll be great. When Bitcoin goes from 20,000 to 65,000, that's the same percentage that this has done in the last month. DRV, ticker symbol DRV. I can't believe, honestly, I mean, I trade all the time, but I have kind of not been paying attention to some of these inverse funds. I always have done SDS and QID, those guys. I haven't paid as much attention to these. Now, you might be looking at it and thinking, oh, that's as high as it's going to go. I don't know. Think through this with me. If rates are going up, they are, what has to happen to real estate? Well, it's going to come back down. Maybe it doesn't go back down to 2021 levels. Maybe it doesn't go back down to 2020 levels or 2018. I don't know. I don't know how long it was going to go. But here's what I can tell you. For the average home buyer, if you were to have purchased a home a year ago with interest rates then, you could buy about a $550,000 house for roughly $2,700 a month in payment. That same $2,700 a month in mortgage payment today is going to get you about a $350,000 house. So the question is, do home buyers stop buying homes because they, can't afford them and they just rent? Some will do that. Or do they start making lower offers that they can afford? So my real estate agent friends, they're telling me home prices are going to stay high because demand is high. And I'm like, I don't know, because people need to sell their homes. And if you get desperate to sell your home and nobody's paying $700,000, they start dropping the price. Well, this $550 offer looks really good. By the way, I did a little bit of research with Open Door, which is a home buyer, and I found out that they are offering already 20 and 25% less this time this year than they were this time last year. Something to think about. So is real estate going to go down? I think the answer is yes. Now let's come back to this chart and let me show you where we were. This chart is, I'm zoomed in way too much. Watch this. What? Folks, at the beginning of 2021, this is where we were. Now, full disclosure, there was a split. Okay, that's a good thing in this case. Well, I guess it's a good thing. What they do for an inverse fund is, because the prices keep going up, the inverse funds keep going down, they have to split it so the price is expensive again. Okay, so that happened. But regardless, this was the valuation in 2021. That's 105. Yeah, we got more room to go. That's the bottom line. I'm not forecasting prices on this right now. We're not doing full-blown analysis. I'm just giving you some tickers, and I'm just going to zoom out and show you where this has come from. What? 2020, before COVID, there was the spike, okay? When you see spikes here, that's when housing sank really bad, okay? 2019. So the entire bull market that you see in real estate is articulated here as a bearish swing, which means if the real estate bear market picks up, are we going to see 400 on this? I don't know that we're going to see that kind of readings, but look, there is definitely a lot more upside potential. This is another one. I'm going to be talking about this one Sunday night in my profit picks. DRV. DRV is a real estate inverse fund. Keep your eyes on that one. And here's the last one I want to share with you. This is one that I have traded a lot. It's been a few years since I've done it, but looking at this one again, this is, well, let's see if we can get our, come on, ticker. There we go. This is FAZ, and this is the financials. So again, because these are so sold off because they're inverse funds, you have to really scale to make these things look like anything. Okay, that's what the bull market did to the financial bear fund. Well, that means that the opposite is now possible. Now, I don't think it's going to get as high, but we are currently in the low readings here of about 27. And I mean, it was just a year ago that we were 3 times that. So we have had some inverse splits and stuff. So, or reverse splits, I should say. But let me just kind of zoom in on this. This is FAZ. I'll write it on the screen here so you can see the really current. And just for a little perspective, since I'm behind, I can't write nearly as fast as I can talk. Okay, financials. There you go. Just for a little perspective, it was $18 in August, the beginning of September, and we reached a peak here just a couple weeks ago, $30. And yeah, that doesn't look like it's slowing down. So again, this is 3 funds that have essentially almost doubled in the last month. These are leveraged funds, and let me just talk a little bit about that. Leveraged funds mean that there's leverage involved. Most of these are 3x, some of these were 2x, but they're not 1-to-1. So when the market goes down $1, some of these go up $2, some of these go up $3. So these are leveraged funds. They have a lot of intensity to them. You do not want to put all your money in them. You might take a little bit. How much? I don't know, but hypothetically, let's say you had a $100,000 account. You might take $5,000 positions. See what I'm saying? Like not really big. We're talking just enough to get some exposure, make some profit. We're not trying to go double and triple your account with these trades. But let's say you did 5 or 6 of these and you took maybe 15 or 20% of your accounts and just did a little bit. Not the whole account. Most of your account probably needs to be in cash. Okay. But if you want to take a little bit of risk during a bear market like this, these are I ultimately give you 6 funds, but these are 3 funds and then the 3 index funds. So here, I'll just write these on the screen for you again, and then you will have them. So DXD was one that we talked about. That is for the Dow Industrial Average. Okay. Then we talked about SDS. That is for the S&P 500. We talked about QID. These are the inverse funds. Okay. That is for the NASDAQ or the Qs. Okay. Those were the 3 index funds that I gave you. And then the 3 other funds I gave you were TTT, which is an inverse for treasuries. I gave you DRV, which was an inverse. That's an R. DRV. Can you read that? I hope you guys can read that. Let me try that again. DRV. There you go. DRV. That is for real estate. And the other one was FAZ. And that is for financials. Listen, folks, I am not promising any performance on these, and obviously there's more that goes into the analysis. There is a lot more that goes into the trade setups because I didn't do trade setups for you here. But I think this should give you some excitement. As you look at the market, a lot of people are afraid of what's going on. Here's 6 funds, 3 index funds and 3 non-index funds that are going up in this bear market. And you don't have to be afraid. There's opportunity. Everywhere you look, there is opportunity. It's up to you to know how to execute it. And if I can help you with that, then fantastic. Let me help you. Here's some ideas. You can go work on them. If you need some other training, obviously check me out over at trademaestro.com. Speaking of which, I've just announced my brand new Market Maestro Accelerator. This training is the most complete training that I have ever done at Trade Maestro. We're going to go through everything that I teach in one consolidated training course. Isn't that awesome? Yeah, now this is going to start in November. I'll actually be doing live sessions. You get recorded sessions and kind of all of that. But right now we got some early bird promotions going on, so I'll put a link below in the video here, and you can go check that out. And then we'll be talking a lot more about that over the next 2 or 3 weeks as we get ramping up for that, okay? I hope this has been helpful for you. If you're not subscribed to my YouTube channel, get yourself subscribed because it's really what all the cool kids are doing. And in a bear market, you want to be one of the cool kids because all the other people are, well, they're not here and they're getting eaten by bears. But when you're here, you become, well, let's be honest, you become a bear and you go out there and you destroy in a bear market because that's what bears do. And then whenever the market flips and it's a bull market, you become a bull. That makes you very Gumby, very nimble, flexible. That's what you want to be in all types of markets. All right, so make sure you are subscribed here to my channel on YouTube. Obviously, if you're not on my mailing list over at trademaestro.com, do so. And again, thanks for watching. Until next time, happy trading to all of you. We'll talk to you soon.